All right, well, let's get started here. I'm super excited about today to introduce and have on Mr. Steve Little. And before I kind of let Steve get a little introduction and background of who he is and what he does, I just want to first start by saying thank you for those of you that are here joining us. Um, uh, this is all about giving you content and education on subjects that, frankly, are widely available but not used very often and maybe sometimes confusing. So what we want to do is bring a subject today in particular about LLCs and checkbook LLCs and how to use them with your IRA and retirement accounts to you, so you can then maybe use it yourself or understand it better to see if it's something you should be using. I also want to preface as well that throughout this segment, definitely in the chat box you can put questions. Claudia is here with us, our account lead. She helps us with all new business and our team there, so she's going to help organize the questions that come in. We're going to answer all of the questions, well, at least to do the best that we can. And anything we don't know, we will get back to you. So please ask questions throughout this process. We're going to kind of go over a few things first to give you kind of the basis of this subject of checkbook LLCs and how they work. And anyway, so please do that. And also, as always, for those of you that are new, maybe have not self-directed yet, or want to unlock your retirement account from where it may be with your traditional brokerage, you can always contact us, set an appointment with us, and learn how to use those monies and invest in what you know and like and understand. And so that is, absolutely one of our goals. And so anyway, so that being said, let me first introduce you here to Mr. Steve Little. I've known Steve 10 years now, right? Maybe
Almost
10 years, or
pretty close. Yeah,
about 10 years. Steve is one of the nicest human beings I've ever met, and he's also like very funny and nice and outgoing, which is hard to find, I feel like, in the industry of accounting and of the financial side. Typically your CFOs, etc., aren't as creative and also as outgoing as you are, and I really appreciate that, Mr. Little. And also just a great father, a great grandfather. He's just recently had a couple of great grandkids, twins that came into his life out in New York, and just a good person all around. And so, Steve, before we get started, do you want to give a little background on who you are and kind of what you do? And all I'll say that you do is Steve is the president of Horizon Trust Company, and helps lead the company to growing, but also growing in a way that really takes care of our clients. And so, Steve, why don't you give us a little background on you before we get kind of deep into the subject?
all right. Well, appreciate being with you today, Greg. And like I say, it's been a good 10 years and we've had some fun. And we certainly, what I appreciate about you is your entrepreneurial spirit. The creativity is kind of exciting. And it kind of goes along with the subject today, LLCs, that we'll get into. But I've been in the accounting tax business for over 35 years and essentially have always been in industry. Never went the CPA route. Didn't want to be a public accountant, so to speak, and sign financial statements. I always wanted to help businesses grow, help businesses be creative, and just make some money. It was really about kind of all of what I'm about, is just let's build some wealth and build some money, and let's just have fun doing it. And so as a tax professional, I get a lot of people who come to me and say, hey, I want to get it. I want some tax savings. I want to set up an LLC. So they immediately associate LLCs or limited liability companies with tax savings. And I keep explaining, there's no miracle that an LLC helps you to save taxes that you couldn't do as a sole proprietor. Really, the LLC is a vehicle for asset protection, liability protection. And there is some vehicles that we can use it for tax benefits, which we'll talk about today. But so we've been setting up, at least Greg and I don't know, about 200 LLCs that we've set up. And the LLCs that we set up, and I would say are fairly generic because they're mostly real estate based. They're not specific. So we have done some companies that had some specific language, whether it dealt with marijuana companies or life insurances, that we have to have specific language in the operating agreements. And we'll talk about that a little bit as we move along too, about operating agreements and specific languages, especially regarding checkbook LLCs and self-directed IRAs. But as a way of introduction, we've set up many LLCs, we use them regularly, and I think it's just a great vehicle for building wealth and getting some tax advantages, but primarily protecting yourself and building wealth.
All right, so as we get started here, I will say this once or twice: is you should always consult your own CPA, your own legal advice from your attorney or accountant. We're here just to provide information and content on what we see and what we see of value and how people are utilizing an LLC and also their IRA. Again, but when it comes to you and your plan, it could differ, or it could be a little bit different. So just make sure that if you're not sure, you can either call in and we can maybe answer your question specifically, or definitely check with your own accountant or legal. There you go. There's my disclaimer that I want to share.
If I could just jump in on that too. I mean, this is essentially what I love about self-directed IRAs is that you're your own business owner. You're in charge of your own retirement plan. And so in essence, you've got to look at it like I'm running a business here. And any business is going to have what I would call a board of directors or a board of advisors. You got to make sure you got an accountant on board. You got to make sure you got a legal on board. If you're in real estate, you got to make sure you have a real estate agent or a real estate contract attorney. And you surround yourself and you create a board within your own self-directed IRA. Hey, I got these advisors, and don't go cheap on them and pay them, buy them dinner at least to get some advice. But surround yourself with people who have knowledge that can give you good advice. Don't just rely on the internet. Don't rely on your custodian. Don't rely on anybody except people that you trust, and build that inner circle of what I call the board of directors. And I go, Greg, you do that all the time. You have a circle of what I would call those that are influential to you that you trust, and you go to them when you have a question. You'll send out a text and just get their opinion. And I think that's wise. So I go along with Greg. Just, don't go along with what we're saying or anybody else says or what you read. Surround yourself with professionals that know the industry, especially the industry that you're investing in, and make sure you consult with them on a regular basis.
Perfect. All right. Well, let's just jump into it now. So do you want to talk about first just a few things about LLCs before we jump into checkbook LLCs? Do you want to do that first, or?
Yep. Like I say, the LLCs are governed by the Internal Revenue Code. They're limited liability companies. They're a section within the IRS code that allows you to set up what's called a limited liability company. A limited liability company could be a partnership, it can be a corporation, or it can be essentially a disregarded entity, which means it only has one owner. And when we talk about self-directed IRAs, we only have one entity or one owner. So it is going to be called what's called a disregarded entity, which means it doesn't file a tax return, doesn't pay taxes, and all that stuff. The reporting requirements are very minimal. But if you're talking general terms of an LLC, you could have multiple partners. You could also become what's known as an S corporation version, which means you're limited to 35 members or 35 partners. And so there's different structures, and that's why it's complicated. And then every LLC is governed by a state. It's not a federal entity, it's a state entity. And wherever state you register in, you're governed by that state. So there are a lot of rules that come into play that you got to watch out for.
All right. So sometimes, because this is so second nature to you, it's not maybe for me and others. Let's just, I want to take a step back also. And when you're talking about LLCs and you said a disregarded entity, similar to what we're going to talk about today, let me just real quickly share. You might have heard of, if you're listening to this, a checkbook LLC, an IRA LLC, a checkbook IRA LLC. There's different names for it.
Control LLC, yeah, all kinds.
There's so many different kinds of names for them, but I just want to be clear. We're talking about pretty much the same thing. We're talking about an LLC that is owned by your IRA. So your IRA owns the LLC, and you most likely are the manager of that LLC. And I think this is one of the most important things, and I think that's exciting that you just said, is this is something where you don't file a tax return because it is a disregarded entity. Is that how the word you used? I want to make sure
that is correct. And because your IRA is the owner of that LLC, the only owner, 100% owner, it doesn't have a filing requirement with the IRS. So there is no return to file on behalf of your IRA as an owner.
Okay,
Whereas if you're
so stop there. I mean, that's a big deal. So for
big
those of
deal.
you, sorry, little. So this is one of the only types of LLCs where you don't have to file a tax return for it, because it is owned by your IRA. Now, so just a couple little questions. Can just the Roth, can just my Roth IRA own it, or just my traditional? Can if any one of the IRAs own the LLC?
Law, yes, that's correct.
Okay.
And
So
the
if you're an
key here is
individual that has,
the key
go
is
ahead.
that there's two components. First, you have to have a self-directed IRA plan. So you wouldn't have an IRA. If you have your monies with Charles Schwab or TD Ameritrade, you're not going to set up a Checkbook LLC because they're not going to allow you to self-direct or buy an alternative asset. So there's no need if you have an IRA with, let's say, one of those other companies that's, the traditional brokerage companies. There's no use to talking about a Checkbook LLC for you because it wouldn't be of any use. And so what you do have to have one component is setting up a self-directed IRA account. So you go to Horizon Trust and you set up a self-directed IRA account. And then you roll over
I'm gonna open this up here just so everyone can kind of see this. I think this will be helpful as we talk about this. Can you see this? Maybe
Yes,
comment here if you can see this. Yeah, can you see it? Okay, so this describes a little bit of what Steve just said. So I'm gonna let you turn it back over to here in a second, Steve. But just real quick, if you see here, the first step, if you want to have a Checkbook LLC, is you first would open up a self-directed IRA with us at Horizon Trust Company, which means you'd move funds over, what Little said, from your prior, from your Fidelity or Charles Schwab or whatever brokerage over to a self-directed IRA. Then, as you can see on the screen, your IRA would fund and own the IRA LLC. Now, this IRA LLC, the member of it would be, for example, if it were me, it would be Horizon Trust Company, FBO, Greg Herlean's Roth IRA. That would be the 100% owner of this IRA. The manager of this LLC would be me. If Steve is opening up his Checkbook LLC or his IRA LLC, his member would be Horizon Trust Company, FBO, Steve Little's IRA. And so that's the first step of having a Checkbook LLC. Go ahead now, Steve. I cut you off. I apologize.
Yep. And if you look in the orange, another way to fund that, I was just talking to a friend of mine who's actually a dental student. He wants to open up a self-directed IRA already. And I said, you could just open it up. He says, well, I don't have an IRA to roll over. I said, you just make a contribution. As long as you have some taxable income, let's set up and you can basically fund it through a contribution. And then we'll go ahead and get you an LLC set up and get you moving forward with some investing. So he's pretty excited. Just as a dental student, he's already thinking about the future and for his practice. What I love about the middle part of the IRA LLC is that LLC could be any name you want. It could be, some wild name if you want it to be. It could be, or Greg Herlean LLC. It's not in the name of Horizon Trust Company. That's not the name of the LLC. It's the name of the LLC that you want to call it and what to be known by and what you want to basically hold your investments in. And this is subject to availability in the state in which you apply. So once again, you apply for the LLC in any state that you want in the United States. Some states are better than others. Some are cheaper than others. I mean, if you go to California, it's $800 a year to renew. If you're in Nevada, it's $350 a year to renew. If you're in Wyoming or South Dakota, it's a lot cheaper, $50 or $75 a year to renew. So every state is a little different. But what's unique is once you set up that LLC within the state, then you can transact business. You can open a bank account. You can then transfer money from your self-directed IRA into your bank account, and now your LLC is funded. And so then you're off and going and basically doing your investments. Some guidelines real quick, just about some state jurisdictions. Okay, what state should I do it in? Some states are better for these types of LLCs. You do have to have some operating agreement. We'll talk about that a little bit later. but it has to have specific language to comply with your ERISA rules. Those are tax rules implications. Some states are better for that than others, but all of them pretty much have provisions to allow you to be that way. Some states, like for example, if you set up an LLC in the state of Utah and you buy some property in New Mexico, they may not accept your Utah LLC. You may need to register as a foreign entity in New Mexico to actually buy property in New Mexico. So a lot of this can be driven by where you're actually going to do business. Am I going to buy real estate in only one state? Am I going to buy them in multiple states? That could determine what state you file your LLC in. And so that's, once again, you're going back to using your board of director professionals to say, where's the best place for me to get this set up?
Perfect. So after you've got it set up and now it's funded, as this simple graph shows, you're then that entity, that LLC, can buy different investments. It doesn't have to be just in one investment. That LLC could buy a property, a rental property. It could buy a flip property. It could buy a wholesale. It can invest in multiple different investments. And then as it invests in those things, the benefits of that get paid back into that same IRA LLC. So it goes right back into there. And so as far as that, there's a couple of different things I wanted to share on this. Is first, as the manager of that IRA, my IRA can own it, and I can be the manager of it. If I'm the manager of it, that means I can go out and negotiate deals. I can go find deals. I can do a lot of different things. But one thing you're not to do is shouldn't be physically, digging holes, putting, the drywall in there, but you can hire somebody, you can manage the process, but you shouldn't be the one physically doing it. Why? I don't really know why. Maybe Steve Little, you can explain why, but I know that is a rule that you can't physically be doing the work on it, but you can oversee, you can hire the contractors, you can negotiate the deals, etc. But maybe you know the answer why you physically cannot be the one doing the work on the property.
I think that just comes back to the IRS rules and setting up retirement, any type of retirement plan. The money is to be set aside and used for retirement sometime in the future. And so if you gain a benefit of it today, somehow, some way you benefit from it today, then it's bypassing all the IRS rules. So Willie, if you benefit by, I'm doing the work, means I'm not gonna have to pay somebody else to do this. I'm gonna basically bit my sweat at the end of this. I'm benefiting today because I'm doing that, and I'm getting a gain or an improvement on that. And so the IRS doesn't like that. Or if I'm paying myself a salary as the manager, you're basically bypassing all the rules that they put in place to make this a retirement type plan and to defer taxes or to earn taxes through a Roth without paying taxes. And so you cannot benefit at all. And if you're thinking of, well,
not today. You can't benefit it today at all.
How can I benefit today? How can I get around the rules? How can I put my father-in-law on this rental property rent-free? I mean, just if you're in that mindset, this is not your vehicle. You're just playing with danger. And what I want to go back to originally is that by having this Checkbook LLC, it does not bypass the need for a custodian. There are certain transactions that you cannot transact, which is contributions, distributions, things like that. You cannot do without a custodian involved. And so what traditionally we would do if you didn't have a Checkbook LLC, you would contact Horizon Trust, you would do a direction investment. It would take us anywhere from 24 to 72 hours to distribute the money out to wherever you wanted it to go. And that's pretty quick. And we are only, doing that because we are diligent. We want to verify who you are. I know sometimes some of you complain that we do dual verifications, but we do that just to protect your money. We're here to build trust so that you can know that we're protecting your money, and we're also making sure you're in compliance. And so that's what our outbound team does. But it could take up to 3 days, most likely 2, but it takes time. And if you're at the courthouse wanting to buy an asset on a tax sale, you can't wait 3 days because the property will be gone. So this is the benefit of having a Checkbook LLC. You got your checkbook in your hand, and you literally write the check and say, my LLC has just bought this property. Once again, Horizon
That's
Trust is not the named on it. It's your LLC that's named on it.
that's a great point. And so for those of you, usually we have about half of our listeners are current clients of ours at Horizon Trust Company. The other half are not. So for those of you that are and are not, you don't have to do a checkbook LLC. You can bypass and go straight from the orange colored here, open and self-directed, and then fund directly and buy a rental property to the end. Or whatever the investment is. Your IRA, your self-directed IRA can actually own the investment directly, and it can go back right into your Horizon Trust Company IRA account. That's how actually most of our investors do it. Checkbook LLC is a hot topic because people want control, checkbook control of paying expenses and being quicker. And I think, Steve, you made a great point. This is really for those individuals, in my opinion, that have multiple transactions happening at least a year, if not even monthly. If you're one of those people who, when a bill comes in, let's say on an asset, let's say it's the contractor's bill to pay, pay their contracting bill, and you don't want to submit the forms to us at Horizon to then release 3 days later to pay which can be cumbersome. I get it. I know some of you that are clients are like, oh my gosh, just pay the tax bill. It's not that easy. You got to fill out a form for us, and then then 3 days later we pay it. So most of our clients buy 1 or 2 assets a year and don't need the checkbook LLC. This is, in my opinion, a little bit more advanced. Those that are a little bit more engaged, have more transactions happening, want to have their own checkbook to be able to go down to the courthouse and buy an asset or pay expenses. This is really helpful for that. And what's unique about this IRA LLC is the operating agreement does have special provisions in there that tells you what you can and cannot do. And there are a few things because you can't. One of those things is you can't have compensation as a manager. So it is important, and you don't have to do. We don't do that. There's definitely companies that we know that can help you do that. We can refer you to that will help you set up your IRA LLC operating agreement. Those special provisions need to be written inside of that operating agreement, and those things are important because they're different than your typical LLC. So anyways, yeah, go ahead, Steve. I keep interrupting you. Hopefully that's all right.
No, that's great. There are 3 components of an LLC that everyone needs to be aware of. One is your articles of organization. Those are the very first documents you file with the state in which you're going to set up organization with. And they're called articles of organization. They're very simple documents, usually a form that the state provides, and it provides the name of the entity, and you usually have a resident agent, someone to basically get delivered paperwork if you get official notices, and it'll establish a manager. And then basically that's how you initially get formed. And then once you get formed, they don't ask at that point for an operating agreement. Usually that's when you open your bank account or you transact business at a title company. Once again, you need an operating agreement. It's going to comply with the ERISA rules under the tax guidelines. That's where you want to make sure you enlist a professional that's familiar with these kind of rules and this kind of language in the operating agreement, and make sure the manager duties are specified. There's no compensation for the manager, those types of things. And then the third document is the IRS EIN number. And you say, why do I need an EIN number if I don't have to file a tax return? Once again, we need that because you're going to set up a bank account. You don't want that in your personal Social Security number. Obviously, that gets reported. There's tax reporting that comes in your Social Security that you don't want to have because it's not taxable. So you set up a EIN number with the IRS. And those 3 documents you can actually take to a bank and open a bank account. And then you have to remember that each year you have to renew your LLC with the state. Some have relatively cheap. I think Arizona doesn't have any renewal fees. There are some states that are like that, but others have, like California has an $800 a year renewal fee. So they vary by state.
Of course they do.
And
then California does.
You may need to set up what's called a foreign LLC, which means register your entity in another state as a foreign LLC if you want to transact business in that state to buy real estate. So there are a lot of things that are moving parts, but it's actually pretty exciting. And once again, you're a business owner right now buying lots of properties. And if you have lots of properties, a checkbook LLC makes sense. You got rent deposits coming in, insurance payment, property taxes, repairs, all kinds of things coming and going. it just makes sense to not have to wait those extra days to go through the custodian.
And if you're flipping a property, same thing. There's rehab costs, et cetera. It's nice to have checkbook control. Keeping good bookkeeping, I think, is really important. One other thing I wanted to mention is you can't commingle your IRA money with your personal money. So let's say a bill comes in and you need $5,000 to pay this invoice for an asset that your IRA LLC owns. You can't personally pay it. It needs to come from IRA funds. And so therefore you want to make sure that you have enough IRA funds to do the transaction, to do the rehab, et cetera. So definitely you can't commingle. And I want to make sure just everyone listening here, a quick little break here this is recorded. So I know Steve's sharing a lot of good bullet points with you. We're going to send this out, I believe tomorrow. So you'll be able to hear it again. But I think even more importantly, because there are a lot of people that do this with us every single month that open up accounts with us. If you want to schedule an appointment with us, if there's something you want to learn more about, or we're going too quick on one of these bullet points, feel free to have a one-on-one consultation with us. It's free. It's a strategy kind of session to help answer questions you might have that we might not have answered. We're going to get to the questions here in a second. I see some of them building up. So just wanted to stop for a second and let you know that this sometimes can be a lot when you start talking about LLCs and asset protection and IRS. It's not so daunting. There's many clients of ours that use the Checkbook LLC, and it works very, very well. It is a sexy thing out there for people to be using to have lots of transactions happening. So,
interesting thing, Greg.
Steve, go ahead.
My mother-in-law has a commercial property that's held in her IRA, and I was visiting with her a couple of weeks ago. And she literally has a checkbook. You think about what a checkbook is. It's a little checkbook wallet, has the little checks you rip off. It's up on her windowsill, and it's for her checkbook IRA LLC for the commercial building. So I said, hey, can I take a look at that? And I did. And there was like 40 transactions, rent from different commercial. There's like 6 tenants in there. She deposits the 6 rent checks, pays the property taxes, a few of the common area lighting, things like that. And I said, this is pretty cool. So it's just like an old school checkbook. I think it's 20 years old now. It's been sitting up on her windowsill, kind of sun faded.
That's great.
But it was kind of cool.
That's great.
One thing
That's great. I love it.
Going back to the need for a custodian at year end, as the LLC will need to let us know what the fair market value of the assets are, so that we can do all the IRS reporting, because we do report to the IRS the fair market value of your IRAs. And so once again, the custodian you can't bypass. You got to have a custodian involved for certain transactions, and then year-end reporting. You can't send out, distributions on your own. You can't do that through the Checkbook LLC. That has to go back through the custodian, because we withhold taxes for federal or for state or both. So there's certain transactions.
We report to the IRS.
And we report the IRS, and we report year-end fair market value.
Yeah. Perfect. I got a couple of slides here, and then we're gonna go to questions here that have built up. I think we've probably covered all this, but I want to make sure we have, because we prepared literally 3 or 4 slides. But checkbook control, I think we've already talked about. You can diversify. It helps you. There's you're not having to deal with us for all the transactions. I think we've covered all these points, right? Tax-free transactions. Yep, we've already covered these. So that disadvantages.
Yeah, the biggest one is your money. You can write a check right now. That's the biggest thing. There is no waiting.
That is the biggest. That's
or you can have a debit card.
100%.
You can have a debit card. It's not. Don't think of it all paper checks. You can have a debit card.
And then disadvantages. Look, joking about there's none. There is a lot higher level of responsibility. You got to make sure you're active on this and have good bookkeeping. You can't be sloppy about this. So make sure you've got a bookkeeper, or you're doing a really good job on your record keeping. That's really important. So tracking all the data is more work. So this is a little bit self-directing. Just having an IRA account, you're more active than your typical brokerage account. Having a Checkbook LLC is the next level up. And if you're really wanting to be a little bit more active, this is the next level. So you got to make sure you track everything. Anything else on that, Steve? I don't think there's anything else on there.
No, like I say, once again, you got to be careful. You just can't make investment decisions without consulting somebody, because there's a lot of rules about ownership and control that, you just got to make sure that you don't violate anything and cause your whole IRA to become taxable. And once again, you can call us at Horizon and run the transaction by us. We'll still consult and give us compliance discussions, and we'll obviously go back and say you could consult your professionals. But you got to be careful when you're writing your own checks. You just can't say, "Oh, this sounds right to me," and it turns out to not be right.
Look, it's our job and our role at Horizon is really to make sure that we account for everything as far as distributions and contributions go with the IRS, but we want to give you as much content and education as possible so you can make better decisions the more information you have. So our website, you can see, has more information about Checkbook LLCs. And we're going to jump into some questions now. I'm going to come back to this one actually. But let's jump into some questions. We have Claudia here on the line. Claudia, have you been watching? By the way, this is Claudia Guzman. She's an incredible team member, executive team member, oversees all new business with the company, and is there early and there late, and just super helpful. It's nice to put a face to the name for, I think, some of you that might be working with our team. So, Claudia, thanks for joining us. Do you want to kind of go over some of the questions we've gotten there, and we'll start taking a stab at it?
Absolutely, absolutely. You guys have a lot of questions, so let's get to it. So the first question I have here is, can I get paid as a manager of my LLC?
Absolutely not.
No.
No compensation at all.
That is correct.
No.
You have to make sure too.
Good question. I would like that. If it was yes, it'd be awesome.
I get this question a lot from clients.
Direct line beneficiaries too. You can't pay your spouse and you can't pay others. Got to be careful.
Yes.
Another question. Claudia, after you ask this next question, if you don't mind putting in the chat for everybody, the link horizontrust.com/event, just so people can click it. For those of you that want to set an appointment to have more questions, or that have an IRA but want to self-direct it and do a Checkbook LLC, or just self-direct it with us at Horizon and set an appointment, Claudia's going to put this in the chat box for you to know and follow us. Again, it's horizontrust.com/event. Set an appointment with us. It's free. We'll answer your questions. If you have an old IRA, old 401k with the previous employer, you most likely qualify to start investing in alternative assets. Frankly, only 5 or 10% of Americans are even doing this, but most people just don't know they can do this. And so anyways, I wanted to mention that. So, all right. Sorry, Claudia, go ahead.
Okay. Another good question is about contributions. So is there a max contribution under this structure? Asking this question because let's say I want to buy a rental. The down payment needs to come from the SDIRA, correct? So the question is, what are the contributions? What are the contribution limits?
are not different. They're the normal contribution limits based on your age and what you have. But if you had other vehicles, like if you were self-employed, you could probably get a larger contribution than the standard contributions. So once again, that'd be consulting with professionals to say, if I'm self-employed, if I have a business, and if I set up a 401k plan, those type of things, what can I do to increase my contribution limits?
Absolutely. Terry here is asking, are admin, marketing, accounting, legal, training fees allowable in this LLC that is owned by solo 401k? So she's asking more for her active business from this SDIRA LLC.
Difficult question. You have to look again, are these benefiting the asset in which you bought? So if you think about, you buy a rental property and you're going to repair the roof, pretty straightforward that expense is directly related to that asset, and you're doing that to increase the value. Or the marketing cost to market that property, could you extend that out for that rental property? I would probably say yes, it probably could comply. You just have to be careful about who you're paying and how it directly relates to the asset and what you hold in that.
This is a great question, and it's a slippery slope because you can kind of start getting into some gray areas. And so I like it, though. I think this is a perfect one for if you want to call in and set an appointment. we can specifically talk about like what kind of business, what you're trying to do with it. And I think we can kind of dive a little bit deeper for you on that. And we want to, by the way. So in general, I would say it can pay marketing expenses and legal expenses. You know, businesses can do that, you know, and so you just got to be careful if what your investment is. And like what Steve said, if those things are enhancing your investment in that asset or business. So,
and I would think too, you go back to those are decisions that someone that has control makes those type of decisions, where marketing dollars are spent, where admin dollars are spent. Typically that's going to be made by a fiduciary person who has control. And that's where the slippery slope gets in, is if you're a control person within this, that you have your IRA money, you're already prohibited out. So got to be cautious about, you know, if you're a 1% owner saying, hey, I'm going to pay all the marketing costs for this business and I'm just a 1% owner, I have no control. IRS is going to look at you a little funny going, that's a big investment. So
yeah,
got to be careful.
Question, Terry.
All right. Heather here is asking, what happens when you sell the property? And I'll add to that, what happens when you want to take a distribution and the money sitting in the Solo K LLC or the IRA LLC?
So the proceeds will go directly to the LLC. The LLC is the owner of the real estate. Is the owner of the real estate on record. So when the title company closes, they will send the money directly to the LLC. Distributions are not allowed within a checkbook LLC. You'd have to send the money back to your IRA account at the custodian, send a request in for direction of investment or a distribution form, and ask for a distribution. And that would then be taxable at that.
That's right. And that distribution, typically you can't take a distribution, not typically, but you can't take a distribution until you're 59 and a half. And so if you're not that age yet, you can't take a distribution. But I look at this still as, even though if you aren't 59 and a half yet, this is, some people get kind of caught up on that. Like, oh, I can't touch my money. I feel like you can touch it. You just can't pay your personal bills with it and do the vacation thing. But now all of a sudden, like right now with Charles Schwab in your retirement account or Fidelity, wherever you're at, what can you do besides meet with them once a year and you tell them, you know, on a scale of 1 to 10, you know, what's your risk level tolerance? And then they kind of allocate you where you should go. And that's it. This you can touch, but you can't play with, if that makes sense. Meaning you can make decisions on your investments, which I think is very exciting, but you can't go to Cancun on it. And you can't pay your personal mortgage on it. So there is still some limitations. Absolutely. So yeah.
Nice. Thank you.
Next question.
So, Penny is asking, do you know why I can't? So this isn't for the LLC, but this is a good question because I know that several people might have the same question. Do you know why I can't move money from my current 401k from my current employer to a self-directed IRA company like yourselves?
But is she still employed? Is that the problem?
Yeah.
401k plans have those ERISA rules, and it has to be in the plan documents that you can actually take them out. Now, we have several new clients we signed up in the past month that have provisions in their 401k plans that they actually can take out their own money. They can't take out their employer contribution portions, but they can actually take out their own money and roll it over. And so it's all on the plan documents of her individual 401k sponsoring company. And I bet there is a provision probably in there that allows her to take out her own money and roll it from one custodian to another.
Yes.
It may be prohibited, you know, because that's in the plan documents of every individual plan is different.
The best thing to do is ask.
Yeah, they're all similar, but you know, they are different and they may be prohibitive. But most 401k plans usually have provision you can roll away your own money after so many years of being in the plan, even though you're currently still employed with that company.
Perfect. Thank you. Are LLC renewal fees tax deductible?
Once again, are you going to pay them from your IRA? There's no tax reporting, so there's no deductions.
But if it's not, let's just say go the other route. If it's not owned by your IRA, it's a typical LLC. Is that an expense to a regular LLC? I mean, as a tax write-off? Yes. Okay.
Yes. And the next question would be, what are the costs to set up a self-directed IRA LLC?
Barry, Claudia, you probably
that ranges. And Claudia, why don't you answer that question?
We actually have a program that we do set up LLCs here. It is anywhere between $1,000 to $1,500. It depends on what kind of structure you're in. So just go ahead and give us a call and we'll be able to go over that with you on the phone.
And then your state filing fees will be on top of that, and they vary by state. And then
Yes.
you'll have
And once you set the LLC, it's a one-time fee, and then after that, it's just the state fee every year thereafter. Correct?
Mm-hmm. For the first year, it includes the state filing fees. That's why it depends on what state you're going to set it up in. That's why the variance of $1,000 to $1,500. But it comes with a specialized operating agreement that has all of the provisions that the IRS requires for this type of LLC. And we work with entity formation companies that actually draft up all documents with that special provisions, and they also work with you, and they know what an IRA LLC is, which is not a very typical entity structure. We've come to find out that there's not a lot of companies that do them, so that's why we recommend that you talk to one of our IRA specialists and go over that process with us.
I think
But
too
it's
that
not. But I will preface: you don't have to. You can use anyone you'd like. We're obviously, but you can only use us as the custodian. I'm joking, but obviously you use us for the custodian part, and then we can either direct you to someone to help you get the LLC set up, or you can find someone yourself. So go ahead, Steve.
I think you need to look at the cost too, amortized over how long you're going to build wealth. I mean, if you invest $1,000, $2,000 today, but I'm going to have this retirement plan for 20 years, it's pretty inexpensive to have this vehicle, to have control of your money, and to be able to invest right away on something and take advantage of a good opportunity. So yeah, I know it may seem like a lot up front if you look at just a window of like a week or two, but if you look at a 20-year retirement plan, it's pretty inexpensive.
Yeah.
Perfect.
Heather is
before we go to the
asking-
next question,
Oh, go ahead.
Claudia, sorry. Before we go to the next, I want to again reminder of this: set an appointment with us if you need to, right here. Also, there's something coming up. We're going to answer these last questions we have, and then we'll wrap up here. But there is something coming up that we're starting this week, September 28th at 3:00. We're doing a Ask Me Anything webinar where this is going to go out to all of our clients and non-clients to come in and ask our staff. We're going to have 3 to 5 members of our staff from different departments. You can come in and ask any kind of questions about forms, about the industry, about what they're seeing. It's important for us as a community for us to give you as much information as possible. And so sometimes you might just be sick of hearing from me. Maybe not Steve Little, because this is his first time on. You'll definitely hear more from Steve Little. But having some people that are in departments that are actually helping deposit the money or send out the money on your behalf, and the forms and the verifications, and just good, any kind of question. So it's going to be an Ask Me Anything Zoom coming up September 28th. You'll see some emails at 3 p.m. Pacific, 6 Eastern. Super excited about that. So look for that, and will go as long as you ask questions. You can bring your own alcohol to your own laptop and ask questions and listen and ask any questions you want. So go ahead, Claudia. I just want to put that plug in there. I'm excited about this next week.
Yes, and so are we. We're going to have a lot of new faces that our clients are not used to. So you'll get to put some faces to names that you've talked to over the years, people that answer the phones all the time and that actually do all these transactions. So we're super excited about this new initiative that we're doing, and we're starting on, like he said, September 28th. So join us. Okay, let's go into more questions. I still have a lot of them. What are other investments besides property that I can buy with a Checkbook LLC?
You can do a promissory note. You can loan money and basically get a fixed return. You can do that. You can invest in cryptocurrency. You can invest in gold. Essentially, any of those alternative assets that you could do through the custodian, you could do through your Checkbook LLC.
Pretty much
this one's a good question. Yep. Should I have more than one property in one of these LLCs?
Good question. Once again, the purpose of setting up an LLC is that you are looking for liability protection. So let's say you own 5 properties and they're all owned in the same LLC. Somebody slips and falls in one of your properties. Essentially, they can attach the assets of all 5 of those pieces of property. So you could set up a series LLCs. Series LLC is one master LLC with a bunch of little LLCs behind it to own separate properties. That's just a risk management. Once again, having someone who's in the insurance industry as part of your board of directors, so to speak, that you can discuss this with and manage either through insurance or through the protection of LLCs or multiple LLCs. So it is a possibility to set up multiple ones to own different properties.
Yes.
And look, I'll tell you what I see in general though in the industry. And again, you can ask I'm not your legal or your accountant on this, but I see that most people will buy multiple assets with one LLC. I don't see very many people starting a new LLC for every asset. It can, especially if the assets you're holding onto them and they're very valuable. But if you're flipping properties, you can do them all in the same thing. Or if you're buying a couple different assets, it's very common to own several different assets in the same LLC. If you're paranoid and you really want to make sure you feel like there's a risk, you live in Pittsburgh, you're buying properties in Pittsburgh where it's always icy for like 9 months out of the year, or Buffalo. I saw some Buffalo people watching here. You might want to do separate. That was kind of a joke. Separate LLCs, but that's kind of what I see as well. So, but go ahead. You want to move on? Next question.
Yeah, just to add to that, another strategy that I've seen in estate planning is real estate privacy trust. So you set one of those up under the LLC, and every property will have its own real estate privacy trust. It reduces renewal fees, so you don't have renewal fees for each LLC, and it does separate the assets. So that's something that you can talk to your asset protection lawyer or somebody that if you're at that level, you should have somebody that's protecting your assets anyway. So definitely talk to them and let them know that you're looking for some planning on that.
Now hold on here, Claudia. She's a veteran. I want to make sure that I didn't mention this. Claudia came to us from a entity formation company who did tens of thousands, I believe, of these. And so you probably should have hosted today because your knowledge is very deep in this subject. So thank you for being on here. Go ahead.
Just so you know where your protection goes is they only can sue the LLC as the owner of the property. They can't sue you IRA. They can't go all the way back to your IRA and try to get that asset into it because it's separate. And so once again, you don't want to move all your cash and put it into your LLC and have, $300,000 sitting in your LLC account, just sitting there. And then somebody has a claim, they can attach that cash that's actually in your LLC. But if your LLC was back at your IRA doing something else with it, then it's protected. And so you just have to watch out for those things. It's like, what can they get from my LLC? What's in there that they can attach? If there's no cash, buying multiple properties isn't going to be that big of a risk. But if you have a lot of equity, it might be. And you go back to the real estate trusts.
Yes. All right. A couple more questions. What are the options for the property once I turn 59 and a half? Distribution age.
Well, little help clean this up for me a little bit, but I do know if you have an asset that's in your IRA LLC and you've turned 59 and a half, you don't have to do anything. It can continue to stay in there. You only have to do anything with assets in your IRA, which happen to be maybe your IRA LLC. Once you turn, I think it's 71 and a half now, right? So once you're 71 and change, then you have to take it's called RMD, required minimum distributions, which might mean if you have no other assets besides what's in that IRA LLC, you might have to sell an asset. But at 59 and a half, that does not trigger anything as far as taking distributions. It just means you're allowed to.
Right. Or moving assets from your LLC back to your IRA. It doesn't trigger anything that causes any problems.
Yes. Somebody is asking if they can take a personal loan from the LLC since they have checkbook control.
Not as an IRA, no.
No.
401k plan.
Yes, and if you
401ks.
do
Okay.
want to take a loan from your 401k, we do have that. Well, the IRS has that option, but you can't take it out of your Checkbook LLC. The Checkbook LLC funds have to go back into your Horizon account, and then from there, we would set up proper documentation that shows you as the personal loan borrower, and then we'll send the money out to your personal. It has to be a personal checkbook or checking account. So that's a good question. It's only allowed in 401ks. But you are not allowed to take it from the Checkbook LLC. So make sure you guys are doing it correctly on that side.
Perfect.
A whole life
Let's try to
policy. Can they buy whole life policy with the Checkbook LLC?
Nope.
No.
Can't buy life insurance through your IRAs. Self-directed.
Perfect. Do you guys want to take a couple more questions?
Let's do one more question, and then one or two more, and then we'll wrap up. And I want to wrap up with one final thought here from Steve Little. But let's go ahead.
Okay, let's do this one that's kind of pertaining to us as custodians. What is the difference between a solo 401k and a self-directed IRA?
Solo 401k is going to be where you have some self-employment business income. So you're self-employed and you're basically setting up a retirement plan for yourself as a sole only employee. You don't have other employees. And a self-directed IRA could be anything. It could be a rollover IRA, inherited IRA. It could be just a normal contribution. It could be Roth. It's just an individual retirement account.
Perfect. What you want? One more there, Claudia?
Yeah. Let's see.
I don't know. How many more do we have on there?
We have a lot, but they are kind of personal. So I think what we're going to do is we're just going to set the link so that they can schedule appointments, because some of them I can't understand exactly what they're asking. So it's kind of more of a conversation between an IRA specialist and the client. So we can go ahead and move on to you guys.
All right. Well, look, yeah, I think she put it in the chat. You've got our link. Set an appointment if you want. We'll answer your personal questions when it comes to your retirement plan. We're very much engaged and we'll find the answers if we don't have them. So, thank you. Look, thanks a lot so much, Steve Little, for being here today, President of Horizon Trust Company. Everyone, so many people look up to you, and you're such a great man and very smart man as well in this space. And so I'm thankful for you, Claudia, as well. And next time you're saying more, I forgot how good you are on this subject. And as we wrap up here, like I like to do always is end on sweet, sour, and service. So this gets us to get to know you a little bit better. So I'm going to ask you both. Let's end on a sweet, sour, and service for you guys the last few days. What your sweet, sour, and service is. Claudia, you're first.
My sweet, I have been able to have my two pups at home and getting to see their personalities. They had never been together, so they joined about 3 weeks ago. Getting to see their personalities together has been so much fun for me. I love just sitting there and watching them play. So it's been very sweet. Sour has been, probably the weather. It's getting colder. It's not cold, but when I walk the dogs, it's definitely chilly in the morning. And I know that you're in LA, so you don't get to experience what we do, but it's cold all the time over there in the morning. For here, it's not as fun. And service, let's see, what have I done lately? I can't think of anything that, I had a good call with some church consultants today, and it was really fun to get to know what they do and how we can, as a custodian, help their members and just go over what they need. And it was a very different call from the affiliate calls that I have sometimes. So it was really cool to see how we can be of service of them. So I'm excited to onboard them maybe.
Perfect. All right, Steve, what do you got?
Sweet is we just bypassed September 15th, which is the deadline for corporate tax returns, LLCs. Glad to have that by 3 weeks to go until all individuals are filed, and that'll be done. So that's kind of being sweet at the moment, even though I'm stuck in a little sour spot with individual returns still to be done. Sour has got to be my little grandkids. I just don't get enough pictures. 4 months old today, or yesterday, I should say. They were 4 months old. Actually born the same day that your daughter Summer was born. And so they're going to grow up together. It's pretty exciting.
Yeah.
Service is just being here today. First podcast. Grateful to be, this community is relatively small. The self-directed IRA community is small. There's just a few of us that are really excited about this business, and those who are clients who want to participate and are active in it. They know how fun it is and how enjoyable it is and how much of a boutique industry it is. It's just great. And my advice out there, once again, not every CPA, not every attorney, not every banker knows what a self-directed IRA is. And so you've got to be patient. You've got to actually help educate people sometimes, but make sure you encircle yourself with people who understand this industry. They're going to make sure you're in compliance, make sure you're following the rules, and make sure that wealth is being built for you. That's the most important thing. We're here to build trust and here to make sure that your money's protected and that you're in compliance. That's our job and our role. And I'm excited to be of that service to you.
Thank you, guys. It's so nice having you. Again, this 28th, this week at 3 p.m. Pacific, Ask Me Anything webinar is going to be coming on. You won't want to miss it. Ask some crazy questions, whatever you want to ask, frankly. So we'll see you there. But also, again, if you just want to schedule an appointment so we can talk about your individual account, if you're one of those individuals that still has one of those old 401ks from a previous employer, and you want to take action and unlock it, invest in alternative assets like millions and millions of people have been doing, you too can do that. And it's so fun for us to see people doing it, taking action, investing what they know and understand. We've seen some crazy things, different businesses people invest in, and some exciting things. It's just so fun to be part of. And so glad you're part of our community, and thanks for joining us. And again, set an appointment, get with us soon, and make it a great week.
Thanks.
Bye,
Look forward
everyone.
to hearing from everyone. Thank you.